selling at a discount to the market. And Microsoft is around 11 times earnings. They still have a very stable portfolio with their Windows and their Office suite. And their real laggard has really been in the mobile phone space. And while that hasn't really kind of taken off, we're glad to see that they're redoubling their efforts, that they're starting to go on the hardware route. We think that is it may have some short-term earnings pain, but long-term earnings and enterprise value gains for them. We're glad to see them really focusing on it because it's really an area that they need to be strong in.
You also like Kroger. Now, I was surprised when I was looking at this stock chart. It's had a pretty decent clip here.
Oh, sure.
So is it still an undervalued name?
We think so. You know, it's funny with Kroger, it's pretty basic stuff, right? It's groceries. But management has done a great job of managing costs and also just being creative in ways of growing the top line. They're one of the few grocery store chains that actually compete effectively against Walmart, and Walmart's the price leader out there.
How do they do that? Just by stocking a lot and keeping prices low, or?
Well, it's a combination of things. One is, you know, they can be more creative in the sort of ready-to-eat meals, you know, the salads, those sort of things that like a Walmart doesn't have. And, you know, they've got loss leaders, you know, so they'll have sales on things that they probably sell below cost to bring people in. But they've been able to, you know, keep costs in line and still do a nice job against even really low-cost competitors. So they've done well.
Another name you like is United Healthcare, sort of traditional name, I guess, in the defensive space. Why that particular company?
Well, they're the largest one, and they've really been innovative in a lot of their database management, which helps. Well, it's two things. One, it provides a service that they can sell, and it also has done a good job in knowing how to price their services, if you will. I mean, they've been very effective in growing their membership base and in making sure that they're making money on what they're charging and their costs aren't too high.
Harder to find value overall in the market right now?
It is right now. I mean, you know, we've had a long run, and we're fine. We love to be fully invested. We prefer that, but we want to see earnings growth in order to justify the stock market going up.
Yeah.
You know, over the last 4 years or so, you've seen the market go up quite well. But earnings really haven't. In fact, you know, since the bottom, I think S&P sales are only up about 20%, while the S&P's up, you know, tremendously. So we want to see robust fundamentals. You know, because to us, when fundamentals are growing, the risk is less.